Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top ranked market timers. And while I have been trading for 30 plus years, are relatively new to YouTube, so we appreciate if you hit that subscribe button and the reminder bell and the like button. I appreciate you guys patronizing our channel. And today we're going to look at our weekly. Oh, by the way, here's our. While I've been trading for 30 years, here's our recent 3-year activity for the short-term report. And as you may or may not know, we've moved our trading over to Striker Securities. They auto-trade our futures trades, so you can open an account with them and be auto-traded because I average over 700 trades a year. We're looking forward to opening up our new website hopefully soon. We're in the coding phase right now. So today we're going to look at the S&P. We're going to look at gold and Tesla, as we always do on Sundays for the week, and we might take a quick peek at the QQQs. Here you can see the monthly chart of the S&P. You can see here we have a primary wave up. We have a flat correction from the year 2000 to the year 2009, an ABC flat. Then we have a run up in wave 3, which topped in January of 2018. The expanding triangle fourth wave, and we are looking for a fifth wave up of primary degree to end this move all the way from the 1987 low, if you can believe that. Okay, so let's look at things from this primary wave 4 low, March 23rd. And actually, we just skip ahead. There is the expanding triangle from January 18 high to the March 23rd low, and you can see we have a 5-wave pattern developing here. What's really interesting is this could be intermediate wave 1, or it could be the 5th wave of a primary degree. Going back here, that one right there, that would portend a major correction of all. Let's just do that. What the heck? Let's just say we get up there to our target just under 4,000. Let's see what we get here. I'm going to do worst case scenario right here. These are rough because I'm not going to get right on those numbers. Let's get this. Let's see here. How about 39, 88's good enough. I think it was 90 something. Let me get rid of this one here. I'm just doing this on the fly. That's what we would be looking at if we were correct this entire 5-wave advance from the beginning of this move. Okay, we're looking at 2547, 2102, and 1657. And as you know, declines usually go within the area of the previous 4th wave, so we could expect a 382 or 500 retracement right in here, right to near these March lows would be a minimum or ideal. Okay, so that's the bigger picture there. Okay, wanted to point that out to you guys. We still haven't quite completed these 5 waves up. Okay, so we can look at things from this March. There's those 5 waves. Okay, and here is the 5th wave target. We keep getting targets just under 4,000. Okay, you can see a completed 1, a 2, a 3, a 4th wave here, and then a move up. Okay, wave 5 is still developing. There's our ideal Fibonacci multiple where 5 equals 1, just under 4,000. That is from the March lows. Okay, and I think this is the October 30th low, and you can see here is that October 30th low, and we've got a completed 5-wave pattern there, a 2nd wave here. This shows a 3rd wave being equal, again, just under 4,000. I want to skip ahead. Here we can see the fractal within that 5 waves up. We have 1 and 2, and within 3 we have 1 up, 2 down, 3 up, 4 down, 5 up for 3. There is 4, and there is 5. And you can see the market moving up from there. And this is the most interesting thing is we still have two viable wave counts for this move up from that correction. This looks like an ABC to me, and then we've got all this going on either from the November 10 low or from the November 12 low. And I think I have it here. Yeah, you can see a series of ones and twos where you have one up, two down, and within three we have 1, 2, 3. We would expect this again. It points to under 4,000, 39.34. So I'm going to show you guys these two different counts here from that low. Let me see if I have it here. Yeah, put this out to our subscribers last week. Here's that 11.9 high. You can see we have a wave count to 36.99 in the black. Okay, so this is a 1, a 2, a series of 1s and 2s. Then within wave 3 we have 1, 2, 3. We would expect a 4, then a 5, up to just under 4,000. However, that diagonal triangle where 4 overlaps 1 is still in play. Okay, so we can count, look at the red here from the low, or this low. We can see a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. And I want to point out these fifth waves. You can count this is 3, and this is 4, and 5 barely eclipse the wave 3 high, which is fine. It's just amazing how short these fifth waves are. Look again here on this third wave in the diagonal triangle. We have a 1 up, a 2 down, a 3 here, a 4, and a 5, just barely above the third wave high. Again, here within the fifth wave of the diagonal, we have a 1, 2, 3, 4, and a 5 within. I'm sorry, I got a little carried away. There is the 5 above the 3. Okay, so these fifth waves are barely qualifying, but qualify they do. So the diagonal triangle is still in play, meaning it's over now or almost over. That could push up a little bit higher. Or if we'll call it the preferred count, where we're going to just under 4,000, is still in play, where we have a wave 1 up, a wave 2 down, and a third wave is still developing as a 1, 2, 3. We would expect 4 to hold. This high here is 36.46. This is our make or break count. If this breaks to the downside below 36.46, we'll expect a diagonal triangle fifth wave to be in and a huge move down. If it holds, we expect the count in black, the preferred count, to continue on to just under 4,000. So that is our, if you want to call it make or break, or we could put your sell stop in there if you're long, but that's our line in the sand, if you will. Okay, that's it for the S&P. Let's move on now. Let's look at the Qs here real quick, okay? QQQs. Okay, this is a daily chart from the March lows. It counts the same up to a point as the other indexes, especially the S&P, but it varies a little bit as we get more toward the current time, okay? We had, where was that one at? Okay, I think we had a 1 here, a 2 here, a 3 where that island reversal was in June in the S&P, 4, and a 5. Okay, so that counts the same from the March lows up to the Labor Day or September 2nd highs. Okay, this decline here and this move up here, this is where it varies a little bit from the S&P. As you can see here, and I will expand that out a little bit for you guys here so we can look at that. This move up here, and I'll draw it for you real quick, okay, is a clear 1, 2, 3, 4, 5 impulsive wave. You can see 4 holds above the wave 1 high, and we got a clear 5 waves there. And then we have a correction down, and then we have what appears to be a 1 and a 2, and again a series of 1s and 2s. Okay, so we could count this as let me get that 5 waves out here. Okay, so we can count this as a 1 and a 2 here. Okay, we'll just throw 3, 4, 5 up here to get them out of the way, and again from here we can see a 1 and a 2. Okay, so this portends that where is that count here? Let me get back to the picture. Okay, that the primary wave count in black is pervasive with the S&P if the S&P and the NASDAQ are not going to diverge. Okay, so the Qs looks like higher highs coming. Let's see what we get here. Let's do some Fibonacci extensions. Give you guys some targets here. Okay, from that correction we have a wave up there and 3. Look at that, 3 is, and I'm doing this. Let me do this here. I'm doing this live. I haven't looked at this in advance. 3 gains of quality with 1 right here at 304. It just eclipsed it. However, it's quite possible that 3 could gain a Fibonacci 1.618 multiple of 1, which would put it up here. Okay, so you have to watch that. The key will be this wave 1 high here. This should hold. And this here in the Qs is 299.14. That breaks and everything's wrong and it's off. But it looks like a series of 1s and 2s. We have a 1 here, a 2, and then 3 is breaking down. 1, 2, 3, 4, 5. So within that, we can get that wave count too. Let me do that for you guys. We'll break this down. And there is a 1 and a 2 and a 3, 4, 5. Okay, we'll make that one lesser degree of trend. Get it in the minuscule. There we go. So this looks like a 1, a 2, and a 3. And then we would have 4 here and 5 somewhere over there. But this wave 1 would have to hold. Okay, that high is 293.51. Okay, let's expand that out even a little bit. Interesting about this here. So let's see what this retraced for this first wave. That retraced near 618, between 50 and 618 on that one. Okay, and let's remove that. Let's get a target for 3 of 3 here. Yeah, this looks very very powerful. That's a move up in 1. There's 2, and we can see 3 there going to 313. Okay, so again, it's a series of 1s and 2s, which looks similar to the count in black for the S&P. Okay, so that's what we're looking at with the Qs, and we have our make or break points there, especially this minuscule wave 1 high, which was 293.51. Moving on to gold. In gold, this chart should look familiar. Okay, we go from the March lows. We have a wave 1 high, a wave 2 low here, and then we have a 3. And you can see our descending triangle pattern. Let me label that for you guys, you Elliott Wave aficionados out there. There's A, there's B, there's C, there's D, and there's the throw under in wave E. See, there's the flat bottom and the descending top, thus the descending triangle, and we get the classic throw under. And what's really interesting here is 4 cannot go below the wave 1 high. Look how nicely that held. It may be less than a point, but this is the make or break for gold. Okay, 1764.65 has to hold. This should be a new wave up to let's get that. I think I might have it up there. Interesting that wave 5 gains equality with wave 1 at the wave 3 high, which is right here at 2079. Unless it makes a high like you saw in the smaller chart of the S&P, where 5 is just barely above the wave 3, which qualifies, it's more than likely that it would take the 1618 multiple of 2273. We'll have to watch that develop. You know, this is a long way to go, but again, there's our make or break line. When that goes below there, we're going to move from a bullish stance, from a long position to a short position. We'll keep an eye on that for you guys. And finally, Tesla. Here is our daily chart of Tesla, going all the way back to the October 2019 low. You can see a wave 1 up there, a wave 2. Recall that we used to have 3 here and 4 there and 5 there. However, this ascending triangle, flat top, rising bottom, there's your throw under in E for wave 4, and since then we've had 5 waves up. recall from last Sunday's update, we were looking for a high of 607, and lo and behold, we got a high of 607. So it hit right on. This is Fibonacci perfection right here, these internal waves from that throw under wavy fourth wave low on October 30th, and we have 5 waves to the upside. But we need to get in and look a little closer at this pattern. So we'll look from that wavy October 30th low. We can count 1 up, 2 down, 3 up, 4 down, and 5 up. There is our 607 high. Okay, this would be the Fibonacci targets of just the 5th wave. You can see we hit between the 500 and the 618. And these here, 521, 493, and 466 would be the retracement of just this 5-wave advance. Let me back up, and do I have those? Yeah, you can see our targets are still the same. To correct this entire 5 waves, we're looking at 395, 329, and 263. However, this from that 607 high as of now does not look impulsive, meaning it doesn't look like it's forming 5 waves to the downside. What does that mean? It means that, believe it or not, Tesla still may go higher. It's hard to believe, but it's perfect 5 waves, but it could be extending. And let me explain this. In fact, let me get rid of these. Okay, we're gonna get rid of all these, and we're gonna do some live Fibonacci here on this stuff. Okay, I'm gonna let's just say it extended. Let's just see what this looks like here of an extension of 1. This isn't going to be exact, but it's going to be close enough. And you can see, and by the way, we can count 2 here or here. I don't know that that's 5. It overlaps. But if let's leave it where it is. And you can see this is a 2.618 multiple, which works. Okay, here's where we had 3, where it was a little more than a 1.6818. Here it's a little more than a 2.618. So it's very possible that this scenario is playing out. Okay, we're gonna have to really watch this, because this just doesn't look impulsive yet. It overlaps. Impulsive waves don't overlap. So our make or break is going to be that 607 high. I'm going to throw these back here for now, just to keep that until our make or break is broken. Go above 607. We're obviously going to new highs. I think I got it broken down a little bit more. Yeah, there is that high. We can call this, and that's that 607 high. The blue line is the make or break level. Okay, and this counts more like an ABC correction. Let me get Fibonacci on that to see what we have here. Let me get a Fibonacci extension tool going here. And here is wave A, there is wave B, and you can see C equals A right here. So it could just be that's the correction and it's done. If that's the case, then we're looking at 1, 2, 3, 4, and 5. Let me and I put a 5 target on there. That makes 612 target, okay, if that counts for 4. So we'll look at this 5 waves here. This could be a 1, that could be a 2, that could be a 3, that could be a 4, or it could be a long sideways event going to there. Whoops, let me move that 4 over. Could be all the way over to there. So we'll have to see. We'll put 5 up there. We could get even higher target if all this is a sideways 4. I haven't really broken that down. It's a 5-minute chart. Yeah, that overlaps a little bit there. There's a 1, 2, 3, 4, 5. This thing could be taken off. So it sure doesn't look impulsive from the all-time high at 507. This doesn't look like a series of 1s and 2s at all. It looks like a 3-wave ABC correction, a flat, where C equals A, and here we go again, up to new highs. Well, here's where we know. Where do you know if you're wrong or not? This is it, the 607 high. Obviously, a break above this means this correction is over, and it's up to new highs. And we can get more in detail with the minuscule count, if you will, of Tesla. Okay, so that should wrap it up. Again, thank you guys for patronizing our channel. We appreciate it. And until next time, take care, everyone.